Alright guys, welcome back to our video once again. Today we will be continuing our series in which we will be learning about markets from basic to advanced. So today we will be learning about market structure, what is a market structure, trend basics, highs and lows, identification of structure, and what are internal and external structure, and then insight on liquidity concepts. Of course there will be live examples as well. So yeah, that's pretty much it. So let's get into the topic real quick. So first of all, why use market structure? Now see, we have to use market structure to identify, is the market going to buy or is the market going to sell? Like, of course it is probability, but if we know what is the market doing right now, like if it is buying or selling, then we can take a trade based off that with a higher chances of hitting our target. So now what is market structure? Market structure refers to this particular structure that is being made in the market. So if I show you a diagrammatic example, it will be like this. This thing is known as market structure. Alright, now trend basics. So market moves in three types of trends. So number one is this. We can clearly see the market is right now going up, or it is buying, or bullish trend. This phase is known as consolidation because the market is not buying as well as not selling. Alright. And this last phase is known as bearish structure or bearish market, in which the market is selling towards the downside. Now, what is bullish structure? Bullish structure refers to this in which market is going up, making highs and lows. And consolidation is this particular area where the market doesn't do any kind of movement towards the upside or downside. On the other hand, downward move or this downtrend is the area where the market is now selling and is going towards the downside. So this is the bearish trend. So overall, these three are the phases in which the market moves. Alright. So now, if I show you the basic trend of bullish structure, it will be like this, or we will simply learn about highs and lows now. So first we'll go with bullish trend. So this thing is known as bullish trend. Certainly some people use trend lines to identify trends, but it is not too much good in like identifying trends because this is an arbitrary method. And sometimes the market can break below, but it will not change the trend and also induce the trendline traders to enter for sell, but it is actually buying. So we will learn about the structure in detail so that we don't get trapped, and can also use some other strategy like trendline and support resistance if required. So first of all, we'll learn about what are highs and lows. Okay, so this is a bullish structure over here. We have highs and lows in this structure. If I mark them, it will be like this: HH, H low. This is a bullish trend in which we are making higher high and higher low. Higher high is simply a high that is higher than the previous high, and higher low is the low that is higher than the previous low. Now, when the market breaks last low or high, like right now we are in bearish trend, bullish trend, so we'll be considering that as break of the low. So when a low breaks in a bullish trend, it is known as a lower low. Lower low. And the area where this happened is known as market structure shift, or MSS. And one more thing I would like to clear is that when a high breaks the previous high, it is known as a break of structure, BOS. Now this same thing applies for bearish trend. We'll cover that as well right now. So once that happens, we'll expect the price to retrace and then come back down. Now what happens here is this is the lower low because it is lower than previous low, and this will be a lower high because it is lower than the previous high, that is over here, higher high. So after that happens, we'll assume that the market will continue going down like this. Because market works in patterns and keeps repeating itself, we can always assume that if a market is shifting towards the downside or upside, then it is going to continue that movement at least for a while. Now when this lower high again breaks, it is known as market structure shift once again, but this time it will be bullish market structure shift. This one is bearish because it is making lower low, and this one will be bullish because it is making higher high. So now this thing will be like this, and we got a lower low over here, and then a higher high over here, then once again a higher low, and then a higher high. Market keeps doing this every time. Now if I remove this and show a live chart example, it will be like this. This is the daily chart. You can take any chart. Right now I will be showing from the daily time frame, 4 hour, 1 hour and 15 minutes. So first, starting from daily time frame, we can clearly see the market is in an uptrend in this area. We get first break of structure and then a second break of structure. Now I would like to say that you guys have to note that a break of structure is valid only when it has a candle body close. Last time I defined what is a candle and its anatomy. So I hope you guys have watched that. If not, then watch that first, then come to this video because it requires this thing to be there. So once it closes the body above, we can consider that as a break of structure. After that, this low gets taken out. So this will be market structure shift. So if we now mark the higher highs and higher lows once again, it will be like this. Wait a second. Yeah, alright. Okay. Okay, so we will do that. And then where did it go? Alright. Now this thing is known as higher high, HH. Let me increase the size to maybe 16. Higher high, then a higher low, then once again a higher high, then a higher low, and then a higher high. Now from this point onwards, we see a break below this low. Now you may also ask why we not considering this as lows or like this as highs, because they are not the highest point in this total like thing. Okay, this is the whole leg and this is the highest point in the whole leg. Okay, and this is the lowest point in the whole leg. So this will be the high and this will be the low. Similarly, this is the highest point in this particular leg, so this will be the high, and then in this particular leg this is the lowest point, so this will be higher low. After that we have one more low forming over here, but this will be lower low because it is lower than the previous low, and now we'll be shifting into a bearish trend. After that, we make a lower high and then a lower low. So we have a breakout structure once again over here with a body close. Perfectly valid breakout structure. So this is clearly a downtrend now because we are in uptrend from this area. If I mark with path 2, so we can clearly see that we are now shifting towards the downside. Alright, now we'll go to 4 hours. In 4 hours, we will only look at up to this particular area. Now, I already told previously that what is a consolidation. So I would start from here so that I can mark this whole thing for you all. So starting from here, we can see there is a higher high, higher low. Alright, starting from here, we can see there is a lower high, then a lower low. So after this point onwards, do we have any breakout structure? We don't. But yeah, there is an internal structure that I will cover in after explaining what is like in a structure on the 4 hour as well. Like this same thing repeats just as we had seen in daily time frame. This will same repeat in this particular time frame. So I think it will be easier for you all to understand if I go to 1 hour, I believe. Yeah, this will be easier for you to all understand. So we'll look into this particular area. We can see there was a last breakout structure over here. So the lowest point is over here. So this will be our higher low. And this will be higher high. So now where is the break that we have to consider that we are in shifting in a downtrend? This is the low that got broken over here, giving us a market structure shift. Then this becomes our lower low. And then this a lower high. Then we again get a breakout structure. Then we have one more breakout structure. Thus we have a lower low over here and over here and a lower high over here. So now we can see we also broke this lower high. So this will be a market structure shift. Then we make a high over here. This will be a breakout structure. So this is a higher high now because we have shifted to bullish trend once again. So this is a higher high. Change. Alright. Then we make a low that is higher low, and then we continue doing this to this area where we have the last higher high and then a higher low. And then we can see that we broke above because we have a body close around this area. Right now this is known as market open, like market opening gap. Okay, because there is a gap, you can clearly see there is no particular body in, like in clear sense. So yeah, and then we will mark this as our breakout structure once again. So this will be our higher height, new higher height. So there was this structure in in essence. Now we'll learn about what are external and internal structure. So let me clear up this chart once again. We'll go to daily time frame, then we'll reset our chart. External internal structure. External structure is the structure that is like in sense is larger. Okay, we can see that this structure, like this particular structure that I'm marking right now, is very large. Okay, is very large, and it is like in compared to this particular structures like inside this are very large, so they will be considered external. Okay, thus in sense it will be like this. With reference to bigger structure, we can take the larger structure as our swing structure, and the structure smaller than the larger structure as internal structure. Alright, so with reference to bigger structure, we can take the larger structure as our swing structure, and the structure that's smaller than the larger structure as internal structure, or the structure that is inside the larger structure is known as internal structure. So this will be the whole definition. Now if I mark what is the swing structure and internal structure, I guess it will be better if we go to 4 hours. Certainly we will take this much as our whole thing, because we can see the larger structure is like this, while the smaller structure are like this. Alright, so if I mark the swing structure right now, you can see that these are the swing structure because they are larger in like sense. Alright, so they are larger structure, so they are swing structure. So this is the last swing break, so our swing high will be over here, and our swing low will be here. Alright, now what is the what are the internal structure? Now you can see there is a breakout structure over here, and if you compare this particular breakout structure to that one, you can clearly see this is much smaller. Like this is around if I take the measuring tool, wait, measuring here. You can see this is like 124 pips, and this one is just 61 pips. So this is very small in comparison to this one. So this will be internal structure. So now internal structure are generally indicated by I in front of the word. Okay, that means IBOS equals internal breakup structure. Now if we see here, there are many more internal breakup structures, so we can go to 1 hour to identify them. But I would like to say that if we are using a one particular time frame to identify like swing high and swing lows and internal structure, then it will be better, because shifting to from one time frame to another time frame, I am going to cover that in another video. So I guess I better just do it over here. Alright, so internal structure is like this. You can see there is a breakout structure over here. Okay, then a breakout structure over here, because this is a retracement, you can clearly see that. Alright, so their internal structure over here, Let me remove this so you guys don't get confused. So this is a market structure shift, but this is internal. This thing, when there is not a body close, is known as liquidity sweep. I will cover that in the next part as well, but yeah, I will give a overall outlook on this. Liquidity sweeps refers to like a sweep, which is not a body close of a candle, and is it occurs at areas where like retail traders or the traders like us put our SL, and that is generally hunted by the institutions. We can see this is a liquidity sweep because it got hunted, as we can see by using this candle as a rejection or just a wick. Alright, after that we can see that we shift once again, internal market structure shift, then we have internal break once again, IBOS, and then one more internal BOS. That's it. So this is the internal structure, as you can see. Now if I remove this, alright, we'll go here, we'll also remove this because there is no longer required. Okay, we'll now go to 1 hour. In 1 hour, you can see like this is the reason I told to use one particular time frame to identify internal and external structure. Because if you see 1 hour, this internal structure of 4 hours is actually a swing structure of 1 hour. Alright, so that's why I use one time frame while identifying swing highs, swing lows, and internal structure for that particular time frame. Okay, and then for like top down analysis that I'm going to cover like maybe after covering the liquidity part, I will also explain that. So right now that's like everything, most of it is now covered like about market structure. And like I would like to say, like if we go to daily time frame, I better just covered like a partial amount of this. Okay, liquidity concepts. So if I explain what is liquidity, it's the stop losses of retail traders uh, that are hunted by the institutions to execute their larger orders. This causes the market to move one area to the. Alright, so this is the like general example or definition of liquidity. What is liquidity? Now, if I show a chart example, it will be like this. So the most recent example that we can get about liquidity sweep. Okay, so first of all will be this one. You can see this was a high, right? Because it broke like previous high over here. This was a high. This got swept because there is no body close. So this is a liquidity sweep. And what happens after that? You can see it clearly falls. Similarly, this one. You can see this is also a sweep because you can see there is like mostly wick above. Alright. And also like this particular high Okay, this particular high was a liquidity because you can see this is a support zone that got retested over here. That means the retailers would enter here for sales. Now when support breaks, it's known as resistance, and on resistance retail traders tend to enter on retest, and this that means like there will be stop losses here that got taken out by this particular price, and then price fell once again. Similarly, we have equal highs over here. If you know that equal highs are generally areas where retailers like to sell, because as per them the equal highs indicate that there will be selling soon, but that is also utilized by the institutions to take them out and then actually give the move. All right, so that is like basically the thing. Right now today's, like if I show the current example, like totally live example, so you can see this is a consolidation. Okay, if I go to 15 minute it will be better. So this will be a resistance, this will be a support. People will enter here, and then will place their stop loss at the highs. Then it got liquidated over here. Now the price will go down to take out this low or even fill this imbalances. I will also cover them soon. So that's all for today and for this particular part. Thank you for watching, and also let me know about your uh, thoughts on this particular video in the comment section.